Welcome to my channel. Today we will be talking about if SoFi is FDIC insured. When looking at digital banking and fintech platforms, one of the most critical questions to ask is whether your hard-earned money is actually safe. A primary concern for anyone depositing cash into a financial institution is whether those funds are backed by federal deposit insurance. Specifically, people want to know if SoFi is FDIC insured. The short answer is yes. SoFi Bank National Association is a member of the Federal Deposit Insurance Corporation, which means eligible deposits held through SoFi checking and savings are protected up to the standard statutory limit. To understand how this works in practice, it helps to look at what FDIC insurance actually provides. The standard limit set by the FDIC is $250,000 per depositor for each ownership category. For joint accounts, that standard coverage doubles to $500,000. Because SoFi operates as an FDIC-insured institution, money you keep in your checking and savings accounts is completely protected up to these standard limits if the bank were to ever fail. This gives SoFi account holders the exact same baseline government backing that they would receive from any traditional brick-and-mortar commercial bank. However, many users hold balances that exceed the standard $250,000 threshold, which brings up how SoFi handles expanded coverage. To accommodate larger deposits, SoFi participates in what is known as the SoFi Insured Deposit Program. Through this network of partner banks, SoFi allows eligible members to sweep excess cash across multiple institutions automatically. By spreading funds across a network of participating banks behind the scenes, customers can access millions of dollars in total FDIC insurance coverage, often up to $2 million or $3 million depending on the specific program terms and account configurations. This setup allows high-balance savers to keep their money within the SoFi ecosystem while maintaining full federal protection, well beyond the standard single bank limit. It is also important to distinguish between different products that SoFi offers, because deposit insurance rules vary by asset type. While SoFi checking and savings accounts qualify for FDIC insurance, other financial products on the platform operate under completely different regulatory frameworks. For instance, money invested through SoFi Invest, such as stocks, ETFs, or crypto products, is not covered by FDIC insurance. Instead, brokerage accounts are typically protected by the Securities Investor Protection Corporation, known as SIP, which protects against the loss of cash and securities if a brokerage firm fails, rather than a bank failure or market losses. Understanding this distinction ensures that you know precisely how your money is protected depending on where you allocate it within the app. Ultimately, SoFi provides robust, government-backed safety for your cash assets through its official bank charter and partner networks. Whether you are keeping a modest everyday checking balance or managing hundreds of thousands of dollars in a high-yield savings account, the presence of FDIC insurance means your principal balance is secure against institutional insolvency. With that being said, thank you for watching. For more finance videos, kindly check my page. Please like, share, comment and subscribe to my channel. Thank you.